Hello and welcome back to Instant Insights. At Global Data Strategic Intelligence, we track over 100 tech, industry, ESG, and macro themes impacting all major sectors. I'm Carolina Pinto, and today I'm joined with Rory Green, Head of China and Asia Research at GlobalData.TS Lombard. Rory, how are you?
Hey Carolina, I'm great, thanks. How you doing?
I'm good. Thank you for joining me today. In another macro episode we have here, once again, we're talking about Trump and the Trump tariffs because it is a non-stop saga. But today I wanted to get your perspective on how it's impacting China. So for the audience, just a little bit background, although I don't even know how far back to go. But we'll start with in April. In April, Trump imposed a 145% tariff on most Chinese imports into the US. And this was basically claiming of unfair trade practices under Section 301 of the Trade Act of 1974. China's, I would say, successfully retaliated with their own tariffs, albeit these tariffs were at a lower rate. Then in May, the two countries came to a sort of truce, a 90-day truce, and the tariffs were reduced from 145 to 30% for 30 days, for 90 days, sorry. And this will go up an extra 24% after the 90 days in August 12th, I think. But obviously this depends because they're still in negotiations. My first question, Rory, was why was the Chinese government able to be more conservative with the tariffs that they set on the US?
Yeah, it's a great question, Carolina. I think it also really highlights one of our core sort of forecasts and calls around the trade war is that China actually wants a deal. As long as it was on acceptable terms, they were quite keen to get a deal done with Trump and had been engaged in quite significant outreach even before Trump was elected president for the second time. And if we look at the first trade deal, the phase one deal, it's not been bad for China. They've kept a lot of access to US tech, and their share of global trade is up significantly since that deal was signed. And looking now, we know that Beijing thinks that US-China superpower competition is here to stay. But if China can get a temporary deal that stabilizes the relationship and provides time for the country to continue what we call asymmetrically decoupling, that is, reducing its reliance on the US while increasing America's reliance on Chinese exports, that would be a real win. And so far, that's basically what happened. They acted tough, retaliated, stood firm, but also provided some off-ramps for de-escalation. So particularly around fentanyl, China did not react to any of the fentanyl-related tariffs that the US imposed, and instead kept things quite calm and relatively measured. One final part of the relatively not muted response, but considered response from China, in addition to wanting a deal, being tough, and leaving off ramps, the other aspect was that tariffs very quickly became meaningless. I don't know if you've seen any of the Austin Powers films, Carolina, but you may have seen that when Dr. Evil demands these ransoms from the world, and these just makes up numbers, a gazillion, bazillion dollars. And it was a little bit like that for tariffs. As soon as they go over 70%, basically all China trade was going to go to zero anyway. So Trump could say 145%, 1,000%. It's basically the same number, and it gets meaningless quite quickly. And China basically recognized that and said, "This is ridiculous. We're going to stop here, and not going to continue this silly game."
That is a funny comparison, but not that far off. Then in terms of, so this is their international response to the US, but how has these tariffs really impacted the domestic economy?
Yes, so far the impact hasn't been very large. And we've had a little bit of a hit to sentiment for businesses, for consumers, and of course for the financial market. But if you actually look at production and exports, they've remained very strong and have actually somewhat counterintuitively have increased following the tariff announcement. And that's basically down to trade rerouting via third countries and a front loading of demand. So if you're a US importer, we've had this kind of pause and the prospect of tariffs going higher. So you're very quickly trying to increase your inventory before Trump raises tariffs again. So actually orders for Chinese goods have gone up. And the impact on trade and production has been pretty minimal. Of course, that has to end at some point. You can't just keep stockpiling goods. That demand will fall away. And when it does, we estimate that a 30% tariff rate, which seems to be where Trump is looking at and China's relatively comfortable with, would take off about 0.9 from GDP. If China can get those tariffs down to 15% with some removal of those tied to fentanyl, then that would only be sort of 0.45 from GDP, which is very manageable. With domestic demand, property, fiscal stimulus, they're all potentially much larger than that hit to GDP.
I mean, you mentioned all of this stockpiling and rerouting, and that kind of highlights the importance of this relationship between the US and China to the rest of the world.
Yes, yeah.
Off the top of my head, there's one that concern. Obviously, we've just heard rumors of a Vietnam deal. And that's where a lot of rerouting of Chinese goods comes from. Also, there are some concerns about dumping of Chinese goods, especially not in the US because it's closing its doors, but on European markets. So do you have any thoughts on these implications, and what other global implications are there in this US-China trade war?
Yeah. So it's when two superpowers are competing and in conflict like this, due to their massive size, there are, of course, these kind of global spillovers, and the rerouting and elements of dumping is definitely a significant one. And overall, in some respects, this is a double-edged sword. On the one hand, rerouting away from the US market, so Chinese companies harder to sell goods in the US, they're going to try and sell them elsewhere. That's generally actually probably a net positive for a lot of economies. It's going to lower prices of manufactured goods. So if you've got excess supply from the US market, goes to the rest of the world, that's going to push prices down. So it's good for consumers, good for people using that as an input to production. The flip side of that is it will lower the ability for domestic firms who compete in those industries to sell into their own market. So European car makers would be a big example of this, or in South America or South Asia, those same European car companies faced with significant China competition. So that disinflation shock, which is positive, lower inflation is good, versus greater competition to sell manufactured goods. Beyond that, I think we're also seeing a genuine restructuring in global trade and investment. There is, of course, pure rerouting, pure transshipment, where you have a made in China good goes into Vietnam, they put a made in Vietnam sticker on it and sell it to the US. But there's also genuine domestic demand in these countries like Brazil, the rest of South America, South Asia, ASEAN, where China is tapping into the local market and really finding a new source of export demand away from the US. And without the tariffs, China would not be pushed to do that. If you've got access to the US car market, why bother really trying very hard, say, in Brazil or Thailand or parts of Eastern Europe? So actually, the tariffs are pushing China to set up these new, deeper economic relationships with other parts of the world. Often quite high-tech product sales, like EVs, solar, semiconductors. And this could be a really interesting structural driver of geoeconomics, of global trade and investment. So it's one trend very much to focus on going forward.
But even this rerouting, it's interesting because although we have US and China tariffs, all of the other countries are also at threat imposing tariffs. So with solar, we've been seeing a lot that there's been tariffs for a long time. So the reroutings already kind of happened from China to other Southeast Asian countries. And now if Vietnam's getting a 20%, or maybe it'll be higher and other countries will be higher, then will they have to reroute again to other countries with lower tariffs? And is this like just an ever-ending loop?
Yeah, there's an element of sort of whack-a-mole here, that the market will find a way. And if the tariffs are high enough, but the demand from the US remains constant, then they're going to be shifted around. It's, you may have seen those memes, Carolina, of the AI generated images of US workers in a sweatshop making Apple phones. They're funny, but also accurate, because the US is not going to produce iPhones. It's going to be made somewhere else, India, Vietnam, China, and similar for a bunch of other products. So yeah, that US demand story is going to be consistent, and the need for low cost manufacturing will be there too. So yeah, it will just shift this production. Costs will be a bit higher, but corporates and the market will find a way. And in particular, it's going to be very hard to regulate on transshipment and to define it and to track it. So you mentioned the Vietnam deal, prospective tariffs on transshipment at 40%, but you're going to need an army of regulators in Vietnam, in the US, trying to track this stuff down. It's going to be very difficult to stamp out.
Yeah, absolutely. I guess my last question is, we are about a bit more than 30 days out from the end of this truce. As of now, what can we expect to happen after the 90 days?
Yeah, I think we're actually in a pretty good spot. We've had 2 high-level meetings, the Geneva and London, and 1 phone call between Trump and Xi Jinping. So I think that generally seems to have stabilized the relationship. Trump seems to believe that a deal has been done for China, a tariff rate of 30%, with the prospect of that the 20 percentage points of that is tied to the fentanyl issue to come down. I think that's quite manageable and reasonable from Beijing's perspective. Of course, there are a lot of tricky questions around tech, but Trump seems reasonably happy to keep the status quo and is not going to tighten on a national security side. So yeah, it looks reasonable. And I would say what to watch, and the sort of the next set of questions hinge on implementation. From China, it's on the fentanyl side, and they're working on that, and the supply of critical minerals to US firms. And for Washington, it's allowing those tech sales to continue to Chinese entities. And thus far, it seems to be progressing reasonably well. And then beyond that, really key to watch will be China stimulus, and a couple of important meetings this month, the Politburo being another one of those. And then for the US, it's those deals with other countries like Vietnam, with that transshipment tariff, and how that's defined, measured, and implemented. So overall, a good spot. A couple of things for us to track, with the ever-present Trump risk underlying all of those things.
Of course, that's always a possibility that everything could be crashing down. But I think you summed it up pretty well, and it seems like we are in a more stable position, at least for now. But thank you so much, Rory, for joining me.
Thank you.
No worries. And thanks for listening at home, and from us at Strategic Intelligence. See you next time.